Remember, if it's earnings season, it's Rebecca Corbin, Corbin Advisors. Welcome.
Hi, Rick.
Let's start out right at the beginning.
Sure.
Tell me who the respondents are and the date of the survey.
Sure. Inside the buy-side survey, we surveyed global institutional investors. We had 84 respondents managing $2.3 trillion, and our survey ran mid to late June of this year.
Now, the big question on everybody's mind, so we'll start macro. What do they think about the economy, globally,
Sure.
domestically?
Yeah, so the economy, in their eyes, is slowing. Global growth is slowing, so it's really a tale of two cities. We got slowing growth, which is the negative, but on the positive side, we have a low interest rate environment, we've got a strong consumer, and the vast majority of investors that we surveyed do not see that we're going into a recession in the next 12 months.
Now, having said that, can we drill down a little bit specifically on earnings and equity valuations?
Sure, so earnings is going to be a challenging period. 53% of investors actually expect earnings to come in worse than consensus. We're going to see 41% expect deceleration quarter over quarter. So we're absolutely in this deceleration period, but they seem to have gotten their heads around that.
So coasting, so to speak.
Absolutely.
Now, when you're coasting and you're making investments, normally you want the companies you're investing in to do different things with their cash.
Sure.
Is there any notion of the preferred uses of cash and liquidity?
Yeah, well, with 62% of investors describing the economy as losing steam, the vast majority of investors want companies to pay down debt. That's the number one, followed by reinvestment. And I think it's important that M&A, which had been very significant in previous surveys, is now the second to last, right in front of dry powder.
But it really isn't surprising. They don't want you to remodel a house and buy new furniture, if the income is questionable, the outlook of one's job is questionable.
Sure.
So no remodeling,
Uncertainty.
conserve cash. That makes perfect sense. Now, whenever I think about cash, I always think about interest rates. Are there any specifics in these respondents' minds regarding how these companies should deal with interest rates or their views on interest rates?
Sure. Well, interest rates absolutely are significantly priced into the market. It's a
what
buoy.
respect? Lower?
Oh yeah, lower interest rate market, absolutely. They are expecting 1 to 2 rate cuts by the end of the year, so that's priced in as well.
Well, we could spend hours just talking about that because it's the demands of investors domestically and globally that are putting these central banks in very uncomfortable positions. Finally, your respondents are global, so kind of rank which part of the globe they like best.
Yeah, so the best part is India, right? They're not subject to tariffs, so we're seeing a lot of strength in India. Obviously, the re-election of Modi, pro-business, so that's the number one economy that is going to grow over the next 6 months. In terms of other places, it's pretty downbeat. I mean, Europe, Eurozone, very downbeat. 60% are expecting slowing growth to continue. And the European investors that we surveyed are slightly more bearish on Europe than their U.S. and other counterparts. China also slowing growth. And of course, the Latin American markets are fits and starts.
Real quickly, in the time we have left, trade and tariffs seem to be a big thing on anybody talking about business news these days. You contrast that now with input costs. Can you reconcile our input cost rhyming with the notions of the fear on trade and tariffs?
Yeah, well, I mean, we have seen really outsized concerns around input costs over the past several quarters. Companies have actually done a pretty good job with regard to handling the input costs, passing on the costs, cutting costs, and so actually margins for the first time are seen to be stabilizing versus decelerating.
You know what? That's really incredible because everybody, of course, wants to weigh in, and it's a politically charged situation with global trade. But businesses are dealing with it. Margins are holding.
Absolutely. And in a slowing growth environment, companies need to be focused on margin.